What's up, YouTube? David Trades here. As you could tell by the title, today we're gonna be looking at how to find highs and lows within the market and how we can implement them into our confluences or into our trading. Right. Um, this is the day one of the course, the free course that I'm uploading on my YouTube channel, and I'm gonna try to stick as consistent as I can with it. I know it might not be as like good as other traders or big content creators, but I'm gonna try my best to explain it to you guys a little bit better. And it's yeah, highs and lows within the market are actually pretty simple to learn. It's not gonna be like a long video where like a 20-minute video or some shit like that, right? I'm gonna make it plain and easy for you guys so you guys can understand it and use them within your trading, right? So first, what are highs and lows, right? Highs and lows are like when the market is like, okay, let's say the market is in a like bullish order flow, so it's in an uptrend, right? When the market is in an uptrend, it creates like lower highs, no, higher lows, my bad. It creates higher lows, right? So let me show you an example of what that looks like here. So I'm just gonna draw. I know I'm not as good at drawing, right? Okay, let's say the market is in the uptrend right here. What the market does is we start out with this low right here. We got another low right here, and it's just continuing up, right? Sometimes it may not even create these lows. Sometimes it will, right? And you're gonna always be wanting to look for these lows, right? Because these lows can help you look for liquidity within the market or break a structure within the market. The market will always react off these lows or highs, right? Um, because this is where people either set their stop losses when they enter a trade or set their take profits when they enter a trade. So the market wants to retrace to these highs or lows or break them to what's it called? Fill in those buy orders or sell orders, right? So let me show you guys the examples of how it looks like on a bullish order flow and a bearish order flow. This is a bullish order flow. It's pretty easy, it's plain and simple, right? What the market will want to do is it will okay, I pressed the wrong button. Okay, my bad. Market will want to then if it does, sometimes it won't. It will retrace either sweep liquidity, so it will wick the first low and it will continue back up, which is called just market like order flow continuation, right? So it wouldn't be as useful there, right? But it's still useful at the same time. It's not useful, it's still useful, right? Because this is where most people would enter trades in, right? What the market did here, the reason it retraced to these lows is because when people enter, let's say right here, right, and the market is in a bullish order flow and they entered longs, right, market is going to continue up, right? It's going to take out the people that entered right here, right? It's going to try to take them out, and it didn't take them. If it didn't take them out, it's going to continue higher, and then at one point, it's going to want to either break structure or just retrace to these lows, and it's going to take some people out right here that stepped that place their stop loss at that point, right? Because most people place their stop loss there. So sometimes the market will react off of the first low, right? If it doesn't react off the first low, this is how it would react. It would wick this part and it would then just continue up, right? And then we continue past these highs right here that it created, right? Or the market will continue down, so it will hit you with one of these and then continue down, hit you on one of these and continue down, right? And then we'd initially be switched over to a bearish order flow if the market breaks this next low, right? So let me show you guys how this looks like on a bearish order flow, right? So market does is it goes down, goes back up, goes down, goes back up. Wow, I am so ass at drawing. Goes down, goes back up, goes down, goes back up, goes. Do not mind this fucking drawing. It's whatever. Just an example here. I'm gonna show you guys on charts in a minute here, right? So, what the market did, went down, went back up, created lower highs. So that's one lower high right there, another lower high right there, and another lower high right there, right? And it would be the same thing as it was with the bullish order flow where the market will want to react off of one of these highs and either go in the same, like react off of it and then reverse back down and go in the same direction, or it might not even react off of it and just continue to go in a different direction, which is breaker structure, right? I'm gonna make a whole different video on breaker structure, liquidity, and everything else after I teach you guys the highs and lows, because everything at the end will connect, and then we'll be able to build a strategy, and I'll show you guys my strategy on winning trades, right? So what market will want to do is it will want to go back off, react off the first one, right? If it doesn't react, it might hit you with one of these, or continue up and then try to react off of the second one. If it reacts, we'll go back down, right? If it doesn't go down, then it will hit you with one of these, or continue back up actually without hitting you with one of these, and then it will continue back up, and then break structure, order flow is switched. Now we're in a bullish order flow, right? Now let me show you guys how this is, like some examples on the charts. Let's go ahead and hop on charts here. What are we in? We're on the 5-minute, and I recommend you guys finding your highs and lows on the 5-minute time frame, 15-minute time frame, or the 1-hour time frame. And those are like the best time frames to find your highs and lows, and it's the easiest to find them on, right? So what is the market doing here? We're in a bullish order flow, right? So let's start off from down here. We got higher lows. Higher lows. It can go on and on, on and on, on and on. Higher lows. Right? We got a higher low right here. Right? Market did is we retraced, right? We were in a bullish order flow here, right? Market went up, and then we retraced down to this low and this low. And it reacted off of it, right? And like I said, if it reacts off of it and it wicks it, it's possibly a liquidity sweep. So it will, or it's just continuation of the order flow, and then it just continued back up, right here. And then we got more higher lows, more higher lows, more higher lows, right? And it just continues, right? The market will continue reacting off of these highs or lows, or it will just break through them, and we'll get breaker structure in a whole different order flow, right? So this is how bullish highs and lows look like. Well, yeah. So now let me show you guys the bearish order flow, right? I'm gonna go over here. There's a lot of market price action has been really, really bad recently. I'm not gonna lie. Hopefully we get better price action this coming week. Okay, we got a bearish order flow right here. What is the market doing? It's going down, going back up, going down, going back up, going down. You get the gist of it, right? So we got a lower. Okay, what the fuck is this retarded ass shit doing? Okay, right here we got one high, lower high, lower high, right? And then it just continues on, right? Lower high, lower high. There's a bunch of them here, so I'm gonna just mark out a couple just to show you guys like where the market will react off of them, right? So we're gonna look at this high right here and this high right here. What did the market do? We went back down. We swept liquidity at the bottom from past price action, right? You guys always want to look for that too. We swept liquidity from past price action, right? We wicked this high right here, right? But if you see here, this third candle actually formed above it, right? So, little trick to teach you guys. Sometimes it works, sometimes it doesn't. When the market's past candle like that, like this candle right here, this long ass wicked off of it, but then the next candle has a little formation above that high, then it's possible that we're gonna get a little retracement back down, and we're gonna continue back up into a bullish order flow. And it goes same way with the bearish order flow. So market did is it wicked it at first 2 times, and then it formed a little bit above it, and then it formed another candle, actually a bearish candle, right? Then we went down, we broke that. It was just actually a continuation of the order flow, so we just continued back up, right? Market wicked. It actually formed a little bit, two candles a little bit above that high, right? So what did we get again? We got retracement back down to this high and to where it retraced back up again, and then it just continued like that on, right? Up, and then it retraced back down, right? We formed above this. So what the market will do is it's going to want to look for any type of confluences at the bottom. So like, let's say fair value gaps or breaker structures, or just like, order blocks, right? Stuff like that, like confluences like that, right? And it's going to want to look for those. That's why the reason it does retrace back down, right? So market retraced and it just continued back up, right, until we were just in a bullish order flow the entire time. And you can see these little retracements up and down, right? So this is basically it. Honestly, this is all you guys need to know about highs and lows. I'm tried to make this video short, plain and simple, you know what I'm saying? It still has a lot of information in it, and I just wanted to get it out there to help you guys with your trades and to know what highs and lows are if other people don't know how to explain them to you, right? So thank you guys for watching this video. Hope it helped, and next video hopefully we'll make it on liquidity and go like thoroughly in depth with it.